thank you all very, very, very much for joining us today. We're excited to have this conversation. For those who don't know me, my name is Chris Lustrino. I'm the founder and CEO of KingsCrowd. I started KingsCrowd about 6 years ago, again, with the very, very simple idea of building a Bloomberg, Morningstar, S&P type data and research solution for what we define as the online private markets. I believe very deeply in the future of alternative investing and enabling everybody to be empowered to be able to do so in an intelligent and informed manner. And that's really been our mission at KingsCrowd for the last 6 years and has informed a lot of what we've been doing. So we obviously currently have our round of funding available on WeFunder at wefunder.com/KingsCrowd. We're raising up to $750,000 on WeFunder of a total $1.75 million round, really aimed at the goal of getting us to the break-even line sometime in late 24, early 2025. That's what we're working to get to. And alongside that, continue to make investments in our R&D, including AI and data automations, continue to invest in growing some of our key sales and revenue channels, which we'll hear more about today, and continue to bolster our balance sheet, both for potential future acquisitions, as well as just getting ourselves to a healthy place as a business. So those are the key reasons why we're raising the capital right now. Today is really going to be focused on getting to know our team and talking about the different facets of our business. I know we've had webinars prior that you may or may not have joined where we've dove deeper on various different topics. But today is really going to be focused on team and the various facets of the business. Now, at the end, we're going to leave it open for any and all questions that you may have, which you're welcome to drop in the Q&A throughout as they come to mind or in the chat section as well. And then we will work to get to as many of those at the end and make sure we try and answer as many questions as you have. So with that, I am going to kick it off by getting some intros from our team. So Olivia, would you mind kicking us off with your background?
Yes, absolutely. Hi, everybody. My name is Olivia Strobel. As you may have guessed, I'm based in sunny San Diego. I have been with the KingsCrowd team for about 5 years now, which is crazy to think about. I've been there since the early days, pre-algorithm, and I'm going to chat more about that in a little bit. So I'm excited to be here and chat with you all and tell you about some of the exciting updates that we have.
Awesome. And I'll always be thankful to Olivia. She took a shot on KingsCrowd when there was really no one else in the business. And we're still very, very early days. So the fact that she was willing to come and give us a whirl and now has been here for over 5 years is kind of unbelievable. Next up, we'd love to hear from Mike.
Hi, everyone. Yeah, thanks, Chris. So I'm the new kid on the block. I started in January. My background in the startup space is I helped build an accelerator in Seattle for about 3 years. Went on to work with several startups, a few that were acquired. And so I started investing in startups about 5 years ago. And I became enamored with the process of interviewing founders and building my own investment thesis. I was really drawn to the kind of the adventure and the risk of being an entrepreneur. And now I find myself investing and wanting to go deeper into how that worked. And that's kind of where KingsCrowd came in. I've always had a deep appreciation for crowdfunding, and what appealed to me was it captures the spirit of entrepreneurship and investing. So one of our key investors and ambassadors, Larry Ivan, an investor in KingsCrowd, he introduced me to Chris. And we started having conversations about where the vision of the company, and I had a few light bulbs go off in my head, and I thought I want to be a part of this journey. And so it's only been 3 months. I'm still learning my sea legs. I've got a lot to learn about the industry, but it's exciting to meet the folks on the team, and then also all the ecosystem partners that are out there. It's a very authentic space, and it's really privileged to be a part of it.
Awesome. Thanks, Mike. And yeah, Mike has a really interesting background across many different industries, including golf, and he's always worked in sales, business development, and even built his own businesses. So comes kind of a jack of all trades that's been amazing to work with, and I'm excited to dive in with him as well. Next up is Peyton, who is our COO of Raise Papers.
Hey, everybody. My name is Peyton. I'm based in Charleston, South Carolina. My background is in wellness. I spent 15 years in the wellness industry. I was really a pioneer. I like to say I was drinking green juice and meditating and doing yoga way before it was cool. So I ran my own business, and I also was an entrepreneur. up until about 2020 when I retired and ended up joining a company called LawCloud, which more recently became Raise Papers. And we help founders to file documents with the SEC. And we've really evolved since then to help founders really from the first step of contemplating how they're going to raise capital into their compliance to stay into after their raise. So yeah, really happy to be here as well. And it's been extra fun since KingsCrowd acquired us.
You know, we've had a great year of kind of integrating and learning the business. And Payne's been amazing kind of coming in with all of the expert knowledge of exactly how Raise Papers actually works and helping all of our clients. And it's been wonderful to work with. So thank you, Payton. And last up is Brian, who is our VP of Product.
Thanks, Chris. Welcome, everybody. Thanks for joining us. I'm based in Manchester, New Hampshire, and my traditional background, if you could call it that, was as an aerospace engineer doing rocket science-y things for about 10 or 11 years before jumping into the whole world of entrepreneurship. Now, I've been super interested in alt investing going back to kind of the 2010, 2011 timeframe. So whether it was getting into Bitcoin in the early days and playing around with it long before anyone knew what it was, or investing on crowdsourced debt platforms. And then eventually that brought me to crowdsourced real estate. And eventually that brought me to regulation crowdfunding, investment crowdfunding in about the 2018 timeframe. So I actually jumped off kind of my aerospace path and into entrepreneurship and founded CrowdWise, a lot of educational materials, some portfolio tools, and then joined KingsCrowd full-time when KingsCrowd acquired CrowdWise in 2020, 2021. So it's been an amazing journey. I think you will see today, and just good to know that our team is so passionate about investing, about helping founders. Myself, I've invested in 220, 230 of these different online, private companies. Lots of our team members do this. So we have tons of experience looking at all of this information, pitch decks, everything like that. And we're really taking that passion and putting it into KingsCrowd and Raise Papers. So we're really glad everyone could join us today.
Awesome. Thanks, Brian. Yeah. So Brian, for those who don't know, was a really cool story. When I started my first raise in, I believe, July of 2018 or June of 2018 for KingsCrowd, he was one of the first names that came up on the Net Capital portal where I was raising, investing without knowing who he was. And I went, oh my God, this is really cool. This is what this is all about. Like, people you don't know can invest in your business. And I just thought it was the coolest thing. I was like, I have to figure out who this person is. Like, why would they ever just invest in me? And literally Googled Brian Belay, and I see he's like, this aerospace engineer. I'm like, this doesn't make sense. And then found that he had this blog where he's writing about his investments. And I was like, oh, wow, this is really cool. So for those who say you can't get a lot of value from your crowdfunding, that's absolutely wrong. I literally found one of the most important members of our team for the past many, many years. So I think that's just kind of a cool story of how we met. And yeah, myself, I have over 35 individual investments, and then I've helped make over 27 investment decisions out of the KingsCrowd Capital Fund, which we'll get into. So we are going to start with Olivia and talking about our analyst team, our ratings algorithm, KingsCrowd Capital, so on and so forth. So Olivia, can you tell us a little bit? People ask all the time, they want to understand a rating algorithm better and kind of how we came to develop the rating algorithm that exists today.
Absolutely. Yeah, this is one of my favorite topics to discuss. So as I mentioned, I'm on the investment analyst team at KingsCrowd. I work with a couple other fantastic individuals, Teddy and Leah. You may have seen them if you read any of our reports or have been on our site. And the three of us are really, what I like to think of as the boots on the ground at KingsCrowd. We are looking through hundreds and hundreds of companies every single year. And the three of us have, been with KingsCrowd for a long time. We've done, the Republic Venture Partners program. We've done the Dorio, apologize if I'm pronouncing that wrong, qualified investor program. And between the three of us, our backgrounds, our time at KingsCrowd, we have seen a number of startup companies raising online. We've seen successes, we've seen failures, and we know what to look for. And I think this makes our team really uniquely equipped to build what became our proprietary ratings algorithm. And this algorithm we are really, really proud of. I was there, day one when we were, drawing it out on a whiteboard and had really no idea where it was going to take us. And this algorithm, it takes in hundreds of data points on every single company raising online: equity, debt, Reg CF, Reg A. We really cover quite the spectrum. It takes in all those data points. It spits out a really simple rating, 1 through 5, for every single startup. And those ratings are broken down into sub-ratings. We have a couple categories: price, market, differentiation, team, and performance. And then on top of that, we also have an additional risk section that's broken down even more. And that algorithm has been in development for, I want to say, over 4 years now. We started working on it right when I came on 5 years ago. So it's been live for quite some time. And I will venture to say that it is the best it's been in a while. You know, we keep continually making updates on it. We do a big revamp, I would say, about once a year. And you know, as we continue to exist in this space, more and more companies come in, it becomes more legitimized, and the more data we have, the better. So not only are we getting more companies to better refine this algorithm, we're getting more data points to better refine this algorithm. So it just gets better with time. And one of my key roles at KingsCrowd is to make sure our algorithm's up to date, make sure we're taking in all the data that we can, creating more of those features to make it even more accurate, figuring out which companies to rate against each other, and really making sure it's as accurate as possible in assessing risk and potential reward. I'm working on one of these big updates right now. We're on version 3.3 right now, I believe. So there's been quite a few iterations there. One of the big projects I'm working on right now is our price section. It's been difficult, you know, trying to do what hasn't been done before and rate these companies in this really nascent space where, you know, we don't have much to look back on. And price is one of those more tricky, subjective measures of potential reward. And I'm working to make that as objective as possible.
So yeah, let's actually dive in on that. So I'd love first to hear from you, Olivia. What typically helps inform how we decide what needs to change in any given year, right? When we start to make updates to the rating algorithm, what's driving those decisions to say, hey, you know what, we need to take a harder look at price?
Yes, definitely. So we always love customer feedback. You know, we're always, I know, you know, Brian's been doing a lot of that in the recent months. He's sent out some surveys. The other thing we do is look at, you know, now that we have been in this space for a few years, we can see those exits and failures and say like, hey, you know, this company failed, but we rated it really high here. Why was that? Is that incorrect? Was this, you know, a fluke? Is this something that we could fix? You know, and we go through and we test these ratings, we compare it to what's out there and what's known. And we always, you know, take in customer feedback. Sometimes we take in founder feedback just to hear, you know, what they think we're, you know, getting right and getting wrong. Not saying that they're, you know, the ones changing our algorithm, but it always helps to, you know, hear those different voices in the space.
Well, I think one of the things that was interesting for me to kind of give you a high level sense of that is when we were looking at some of the price dynamics, and by price, right, we're talking about the valuation. One of the challenges for us is there are probably almost a third of companies that come and raise on these platforms, right, out of the thousands of deals they raise on a yearly basis, have no financials. They're kind of day one companies or an idea on a piece of paper. Well, those companies that have, you know, all zero financials could be compared against a bunch of companies that are also very early stage and have no revenues, but maybe they're a biotech or a deep tech company that requires an incredible amount of investment. They've raised millions of dollars and have maybe even been around for many years. And the way that our algorithms at first were looking at those was that they're kind of similar, right? That they're a similar stage because, hey, they're both pre-revenue early day companies. But the reality is those companies are much more established and in a way different place. And should they really be compared against kind of these day one companies that are an idea on a piece of paper? And so how do you handle that? And how do you start to bifurcate those businesses? Because there is no perfect line of where that is. But can we look at past capital raise and use that as an indicator? So those are the types of things that we're diving in on. Olivia, one other thing I'd love for you to hit on just a little bit when we're talking about the rating algorithm, when we were first developing it, some of the different research reports you looked at. One of the ones that always stuck out to me was about like founder experience within an industry. I know that you looked at a lot of different research reports. Can you kind of talk about that process and some of the things we looked at for that?
Yeah, absolutely. For those of you that are, academics, you might be familiar with literature review, and it was a really similar process to that. I looked at what was out there already. Again, there wasn't a lot, so we are really trailblazers here in this industry. But what I did find was some studies that measured, founder success based on certain metrics. A couple of those metrics that might be surprising. Older founders tend to be more successful in exiting startups. And I think it kind of goes against this, young founder college dropout trope we have with the, Zuckerbergs and the ones that make the news and are more flashy. Similarly, founders that actually attend separate universities tend to raise more money. And you might be thinking, same university, they've had prior experience together, that should be a good thing. But in fact, it actually expands their network. So that's another thing that we take into account is, how many university connections do they have? How many connections to other companies do they have? What's their managerial expertise? What's their industry expertise? And in evaluating the founding team, we take in, I would say, at least 50 data points on those founders.
Yeah, one of the other interesting ones that's always stuck out to me is like, just for instance, looking at how many universities are represented amongst the executive team, because what we've learned is that networks, right? There's a lot of talk about networks are important to be able to access capital because that's the lifeblood of early stage companies. And those networks, one of the key indicators of that is the universities you went to. For better or for worse, that's where we are today. So there's so many interesting things within it, but what I think is really powerful about the rating algorithm that we built is that it's been in process and under development for years and years now. We have thousands and thousands of companies that have gone through it, and we're continually kind of reimagining and looking at it as we see the progress of the companies underlying those ratings. And so we created KingsCrowd Capital, right? The initial data that we've looked at, and we've done some studies to look at how our company is performing. We need to understand is all of this stuff is going to take 8 to 10 plus years to really see outcomes that are beyond just paper gains. But so far, companies that are highly rated by the KingsCrowd rating algorithm on average are having more success in raising follow-on funding. We're seeing far less failures. We're seeing them when they go out for a second round of funding, they're doing it at a much higher valuation. We have seen some exits and IPOs at nice premiums. So what we have found with the rating algorithm above all else is that we're really good at cutting out the noise and the companies that you really should stay away from. Are we perfect within that? Absolutely not. But we are really good at getting you to the really interesting deal flow that's worth spending time with. And I do believe if you build kind of a diversified portfolio around that, you can do well. Now, again, paper gains, we don't know exactly what it'll ultimately look like, but we do feel like we're moving in the right direction of helping you look at that really interesting deal flow. And are putting our money where our mouth is with KingsCrowd Capital. So let me talk a little bit about our process of how we manage the KingsCrowd Capital Fund and deploy capital into that fund.
Yeah, absolutely. So I think that KingsCrowd Capital is truly a testament to how much we trust our ratings algorithm. It's used as an initial screening for our fund. So anything that rates above a 4.0 out of 5, we immediately go talk to those founders. And our diligence process is relatively quick compared to most other venture funds out there. We are, looking at our ratings, we're speaking to the founder, and then we're meeting as a team, presenting that information, going back to the founder with any questions. Once we get those questions answered, we take it to a vote. So very quick, and that's because we trust this ratings algorithm. We, again, like Chris had said, we want to put our money where our mouth is. And we have made over 20 investments with that fund. Most recently, we invested in Pirouette Medical, which is reinventing the EpiPen. It's a new device for, injectables, also looking in, the Narcan space, as well as personal AI, which is working on creating a personal language model to help assist doctors, lawyers, folks that have a lot of information overload to help them, create that extension of their brain. And we're really excited about both of those investments. And they, again, both rated very high on our algorithm.
And just for those who don't know, so we're making about 2 investments a month out of KingsCrowd Capital, so about 25 deals a year. We're doing that over 4 years out of the first fund that we raised, which is about a $2 million fund. And ultimately, the goal is to be at 100 invested companies to truly create a pseudo index of the KingsCrowd, 4.0 rating and above, right? Kind of the outperform fund, you might think of it as. And while we move quickly, I'd say we actually do it in a really thoughtful manner. So, hey, first off, those ratings are very valuable. And again, that rating algorithm has been developed over many years. That identifies a small group of companies we can actually spend time with. And then we do these deep dives on them. And each team member comes with their own interests, right? Some are really into kind of clean energy. Some are really into medical stuff. Olivia has her own areas, especially artificial intelligence for her. So everyone kind of comes with their own interests. I have my own interests. Ahmed, who's one of our GPs, has his own interests. So we all kind of come with those different things. We all look at the 4.0 companies. We all go off and kind of dive into the companies we're interested in, and then come back with, our report on what we think, and kind of go through a couple of iterations of asking questions, going back to the founders, having them on the podcast, really kind of doing a deep dive of that business. But I do believe, and I think we all believe, that there's a world where we can get to a place that our funds become fully programmatic, where literally it's like, we know if it's 4.0 and it hits on these different criteria, we're going to auto invest into that company. And that's a world I think we can get to, which would be pretty cool. Olivia, thank you so much for kind of diving in on that. And if we have any questions at the end, we will hop on back to you.
For sure.
So,
thank you so much.
Next up, Mike. Got some questions on our new sales and business development efforts that we're making this year. So to kick it off, let's talk about, just some of the efforts that you and I have been making to kind of build up our pipeline. We could start with kind of the sponsorship stuff and go from there.
Sure. So yeah, on the sponsorship side, we're starting to put more resources into holding more events, because one of the keys we're finding is that when an investor gets to meet a founder, it's a game changer. The dynamics that happen between it's that dance where the founder is trying to hypnotize the investor and get them to come on board, and then the investor is going to say, "Hey, talk to me about the numbers, your ARR, your CAC, all these things," and it creates a wonderful dynamic of vetting that it benefits both. And so we have the demo days, which we showcase. It's 4 or 5 founders. We just had an event in Chicago that really we got some good reviews from. And one of the things that, Chris, we talked about afterwards that I want to bring up was, using the KingsCrowd rating system, we were able to vet some really decorated, extremely attractive companies. And that was the feedback we got from the crowd. And I think that's something, there's a lot of opportunity to extend that, to stand up more events. So I'm excited about that, just looking for ways to introduce more founders to investors in a way that it creates a relationship. And to me, that's one of the beauties of crowdfunding is, it's building that rapport where an investor can have a sense of purpose by knowing the founder, and then the founder gets that feedback. Like Chris, to your point, when Brian invested, that means the world to a founder when someone that they don't even know says, "Hey, I've been following you and I like what you're doing, and count me in."
Well, I kind of said after our Chicago event, so that was the first kind of in-person event that we've done in a very long time, and it was kind of a test case to see what we could do. And what I ultimately walked away from the event feeling was like, these events and quarterly virtual demo days, if you haven't joined, I absolutely urge you to join them. They're wonderful events. They're invite only, where we bring kind of the best founders where, they have to hit certain rating metrics, all of those types of things. We invite them to be on our quarterly demo days that are virtual. And now we're working to do quarterly in-person regional events as well. And what I say is it brings our data to life. Like, ratings are great, research is great, but when you actually meet 5 or 6 founders in one sitting that are all exceptional and have great financials and great performance and are doing amazing things, and you see it in real life, it's far different than just reading on an offering page what they're about. There's a reason why, all of you are here today. It's because you want to hear from us. You want to get to know us. And we've learned over the years that that's probably the most important thing you can do, is give those interaction points. And we've built an incredibly valuable community of tens of thousands of investors that are the most active across the entire industry. Our average user has 17 plus investments in their portfolio. So you all are looking for investments. You're wanting to invest and you're wanting to know more about these founders. So these events are just a really powerful, curated way of kind of bringing to life everything we do and bringing to life the community that we have. And that's paying off, right? Our quarterly demo days, our virtual demo days are $10,000 plus to be a sponsor of. Our regional events, same thing. We've worked with Fidelity in Q1. Rad Diversified's working with us in Q1. Atlas Road is working with us in Q2. We just had another sponsor, Finleet, sign on yesterday. And so I think all of this just says is we're finding really interesting sponsors who want to be a part of these events because of this curated investor community that we have, and that we're really bringing to life through these events and different ways of bringing the community together. So there's a lot here. And one of the other things that Mike and I are working on and exploring, and don't hold us to anything because we set aspirational goals and TBD if we were able to achieve them within the year. But one of the big things we've talked about is actually creating kind of the industry setting event for the entire industry sometime in the Q3, Q4 timeframe. Can you talk a little bit about some of our thoughts there, Mike?
Sure. So, one of the things that really validates an industry is when a conference, conferences start to stand up. And so, because KingsCrowd sits in the center of the universe, we're platform agnostic. We balance, we create a network effect between investors and founders. So we thought, let's bring that, in IRL in real life, and let's start off, not a huge event like a Dreamforce. Let's start off small and boutique-y. One of the things we're considering is the day one of the conference is we would invite the founders, maybe 25 to 50 founders in kind of a more intimate setting, and kind of charge their batteries, have some fireside chats, bring some service providers that can really be some good coaching and whatnot, and to create a cohort, a sense of community among them. And then out of that group of founders, we would select perhaps 10 of them who would pitch the next day at the conference. And it would be an event where they would all be live, have live campaigns running, so that after they give their pitch, they go back to their booth and investors can literally come up and say, count me in. So I think there's some exciting opportunities there that we're taking a hard look at.
Yeah, we want to be able to bring together hundreds of investors, all of the key platforms, industry players, industry providers, the best and brightest founders, and bring us all together for one day to really do something exceptional that hasn't really been done for the industry before. And again, bring to life everything that we are about at KingsCrowd. And one of the other things I want to help you understand is like, well, where did all these kind of thoughts and ideas come for creating these events and having sponsors? And it really comes from kind of the Bloomberg model, right? Bloomberg News, the reason why that exists, right, in Bloomberg TV, and we're kind of doing it for the 21st century, so it's newsletters and podcasts, but these are our media properties. This is how you bring people into your universe. It's how you sell the insights that you have. If you are a part of Bloomberg's news service, which I am, you read their stories and you see these little icons for their terminal to actually go right and actually buy their terminal, which is where they really make their money. But the media properties on the front make millions and millions of dollars and are how they grow their user base and do user acquisition. And that's very much the same model that we're taking with everything we're doing, from sponsorship to events to podcasts, is monetizing kind of our front end experience, monetizing our news and our insights, and also helping to draw investors in and teach them about all the value that we create, and then have you buy into the subscription and data packages that we may have. So there's kind of a tried and true model around that, and that's what we're really investing in trying to build out. And we're building a pretty interesting pipeline. I know we're speaking with a lot of IRAs as well who want to get into this space and be able to offer alternative investing. Mike's been working a lot in that space as well. So there's a lot of really, really interesting opportunities. And in the near term, there's a multi-$100,000 business to be built around kind of the sponsorship front across events, podcasts, and our newsletter. Over the long term, I do believe, as we grow to be something more the size of a Bloomberg or Morningstar, and there's obviously many steps in between, there's a multi-million-dollar opportunity on that front as we continue to build the business. Mike, let's hop into another area that we've been focused on. We've obviously sold our data to many universities, and now some of the industry platforms are starting to want to buy our data as well. But talk about some of the efforts you're starting to make there, what your thoughts are on kind of targeting more of these finance and accounting professors.
Sure. So again, looking at as an industry is in its early stages of the life cycle, once you start to get academia involved, that is a major game changer. It's slow, it takes years for it to happen, but we've already had 6 to 8 universities, very well-known universities, that have published using KingsCrowd data. And we're starting to, we're going to be launching a landing page here soon that we could send out to the universities to give them a little more ideation around how they could use our data. One of the things that I'm excited about is how, like, and Chris, correct me if I'm wrong, it's been a while since I read the report, but I think one of the professors wrote about how humor impacts how a founder will raise funding. So investor behavior is very, finicky. I mean, let's look at, in the crypto space, Dogecoin. I don't know if anyone knows what the market cap of Dogecoin is. I know no one knows what Dogecoin does, but the market cap is approaching 30 billion. And so you think about, why would an investor invest in these sort of assets they know nothing about? It's because there's a psychology behind it. And I think investor behavior is something that KingsCrowd has a corner on the market of. And so I think there's just some exciting opportunities for universities to get involved in accessing our data sets.
Yeah, there's kind of this whole green landscape for both PhDs and professors to go dive in and do research on this industry. What they're really excited about is that we have real financial data, real terms data that doesn't exist in the traditional private markets. And again, talking about Bloomberg, kind of started diving pretty deep into Bloomberg's business model, and they probably do about tens of millions of dollars in data sales to universities on a yearly basis, helping universities to provide access to data to do research on all things public equities and bonds. We have the opportunity to do the very same thing in our space. I could also tell you we're getting really close with one of the largest platforms in our industry on a tens of thousands of dollar contract to be able to purchase our company data to do deep dive research and create their own models and algorithms off of. Over the long term, some of the opportunities we see is quite literally creating open APIs where people will be able to build their own algorithms and models off of, especially as artificial intelligence plays a greater role in startup investing, what have you. This is a way of creating a really high-end, very expensive data product where people will be able to build their own ratings, their own algorithms, their own models off of. That's a world that I think we'll move towards in the long term, but we're starting small and we're just figuring out those pieces and who those right players are to go after. So Mike, thank you very, very much. We also have a whole bunch of other things going on that we're working on the founder front, on our market comps and valuation tool. And I'd be happy to kind of dive in on those, but I just want to make sure we keep the conversation going. I'll hit on a couple of questions that we have in the Q&A section since a lot are coming up. And then we will hop into speaking with Peyton from Raise Papers. So one of the questions that we got is, does KingsCrowd have a future opportunity in Europe? And can USA-based companies do equity crowdfunding with UK and EU investors? Patrick, great question. So absolutely, we think about this on a global scale. The UK is one of the next markets that we want to move towards. When exactly, I won't say exactly when I think we'll do that. I think it could be anywhere between kind of 2025 to 2027. It is a market that we will eventually enter. It's a matter of when, not if, we will do that. LATAM is also really interesting, and we also have a partner in APAC that would love to explore us working with them. There's a group down in LATAM called DXA Invest that wants to do a joint venture and help us enter that market and do the same thing. But the UK is absolutely the most right for us to enter. We've talked with many of the players there. Cedars and Crowdkeep are kind of the two main players, and they all say there's really no one quite as good as KingsCrowd existing in the UK market. And the UK market in many ways is actually more developed than we are here today. And then obviously with the rules that were created in the EU that allows you to invest kind of cross borders wherever you live in the EU is building that market to be even bigger. So there's 100% an opportunity there. To your question about US companies raising the EU, 100%. They're actually trying to find companies that are willing to raise money in the EU that are US based. So we're starting to see more of that. It's still kind of in its infancy, but it's absolutely legal and something they're looking to do more of. And it's certainly something I'm interested in just because, we're always open to exploring new ways of doing these things. So the short answer there is yes, absolutely. One of the other questions that came in was, how quickly will you have information sheets on the latest Y Combinator Winter 24 cohort? So I don't know exactly the answer to the Y Combinator question, but Olivia, I thought maybe you could just hit on how long does it typically take us to collect the data on companies once they have a Reg CF document filed with the SEC and an offering page, and then how long does it take to go to an analyst report or something like that?
Yeah, definitely. So just to be clear, we are looking at Y Combinator companies should they raise follow-on rounds via equity crowdfunding. And we've actually seen quite a few of those recently. And when those startups do go live, and I'm going to pause and say we also do take into account all the accelerators a company has been through. So you can see that on the data that we publish. And once those startups do launch a round, they'll be on our site. They'll have a company page within, I would say, at least a few days. Collecting the data, depending on, how many companies go live in a given week, can take up to a few days, up to a week or so. But again, we try and get that data out as quickly as possible. I would say, at least a couple weeks into the raise, we'll have the complete data set, but the company page is usually available within a day or two.
Awesome. Thanks, Olivia. We're going to hit on 2 more questions quickly, and then we'll hop into chatting with Peyton. So from Jason, we have, aside from the standardization of and access to the data points, seems that the logic algorithms are not unique to CF. Do you see KC doing things with other investment opportunities outside of CF? So great question. Obviously, today we basically cover almost 100% of Reg CF and Reg A plus equity and debt deals. In the future, the goal is to cover all alt asset classes. So that's real estate, that's private credit, that's all the collectibles and artwork and so on and so forth that are out there. So the goal is to go across all alternative asset classes. But I think you're also probably pointing, hey, what about traditional Reg Ds? So the answer there is yes and no. One of the features we'll actually get into in a few minutes is enabling people to add their offline investments into their portfolio, which I think is really cool. But it's taking that step towards, can we serve offline deals in a similar way that we do online deals? The answer is yes, if founders are willing to share that information. So I will tell you, some folks who invest in AngelList deals, some of the syndicates have started to send us deals. And we sign an NDA, and then they'll actually give us access to some of the financials and what have you. And in that case, we're able to run the rating algorithm if they're willing to share the level of data that we get with a Reg CF and Reg A plus company. So the answer is yes, when companies are willing to share that information, or the investors who are working with that are willing to share that information. I can absolutely see a world where we allow venture firms or any other institutions that want to use our rating algorithm to input the data about the companies they're looking at and spit out an answer and give them a rating. It really just comes down to, is that company willing to share that data in a transparent manner, which we all know in the traditional private markets has been an issue for a very long time. So very simply, we will look to go across all alternative assets, and we are very open to doing Reg D stuff where the opportunities present and where people are willing to share that information. To Pramad's question, what is the average age of startups in the fund when first included? Very good question. So we invest in a blend of companies. So we actually are willing to invest in kind of day one companies that, have just started up. If they're reasonably priced, they're in a big market, they have a great founding team, we're absolutely happy to be a part of those deals, all the way through basically sub $100 million valuations. So basically our cap is at the 100 million mark. We don't invest above that, but anything below that, we're willing to invest in as long as it's 4.0, they've hit 25% of their funding goal, where they have a major investor backing them already. And we have a few other criteria in there as well, but we're open to investing in a blend of companies from kind of day one through that $100 million valuation. So with that, I am going to move on and chat with Peyton here from our Raise Papers team. Peyton, thanks for joining us.
Yeah, thanks for having.
Of course. So for people who don't know Raise Papers, I guess first kind of just walk them through our key products, and then we could talk about some of the things we're working on.
Sure. And I'll dial back a little bit. We created a TurboTax-like software back in the day that would take founders through their SEC forms. So for those who don't know, first you have to file a Form ID to get registered with the SEC. Then you have to file this disclosure document called the Form C with the SEC in order to launch your campaign. So we offered that product, we put it out there, people use it. And as we have evolved over the years, we realized what a lot of people realize when they try to raise capital is that it's very complicated. You need your CPA, you need your attorney. And so how do we offer this not fun portion of raising money and help founders through it and educate founders and make it as easy and affordable as possible. And that's our goal. And that's what we've been kind of chipping away at year after year. In 2022, we launched our concierge service. So we have a team of very experienced paralegals who help founders through the process. So it's like having someone who's been there, done that. They've seen people go through this process. They can guide you. They obviously aren't giving legal advice, but they guide you. And then in addition to that, we've kind of built out our program. So we include CPA referrals, and we have network attorneys that we refer our clients to review their documents. So we really help in the drafting of the documents and the filing of the documents, and then have that team that you need to finish it off and make it complete.
So really the simple idea, you know, and you might say, okay, why did KingsCrowd acquire raise papers? Well, the logic here was, for many years now, our analysts and many of our team members have been approached by founders on a pretty constant basis saying, hey, I'm thinking about doing a raise. What should I list? How much can I raise? What should my terms be? So on and so forth, right? And we realized that as many founders are using KingsCrowd, as investors are using KingsCrowd, they're coming to us for answers to navigating these waters. And I went, oh my God, there's an opportunity to help them through this process with data-driven solutions. So I'll give you an example of where we saw real opportunities on the raise papers KingsCrowd front to build synergies and create some really cool opportunities. So for instance, KingsCrowd is sitting on 7,000 private companies that have raised under Reg CF and Reg A Plus in the past 6 or 7 years. And we quite literally have all of their valuations, all of their financial metrics, how they've performed after for many. Okay, could we create a market comps and valuation tool where you could input how much revenue you're making, how much money you're looking to raise, the industry that you're in, and pull up all the market comps? Yeah, we can do that. We can help you actually think about valuation and where you should list and how much you can expect to raise and how long it's going to take you to raise and what your revenue multiples should be and what similar companies look like you. We can answer all of these questions. So what if we could bring that experience and that knowledge and input that into the process of you creating your Form C, right? When you're getting ready to raise and you're creating all of your raise papers, hence the name, could we help guide you and understand what those things should look like and get you prepped in the right way to be able to launch and have a successful campaign? So really helping on the founder side, use our data again to start providing validation and answers to founders. And then the other opportunity, right, is once a company has raised money and had a successful CF or A plus raise, well, now we want to be able to track those companies over time and see how they perform to help with our rating algorithm, to build up our database, and to help keep our investors informed on how their portfolio is doing. And there's so much opportunity there over the long term. So what we've created at Raise Papers is the lowest cost, easiest to use solution for filing your annual report, right? When you do a Reg CF, you have to file an annual report the next year. And lots of founders don't do it. And the biggest reason they don't do it, it's time consuming and it costs a lot of money. So we're trying to remove the cost component and the time component and make it as quick and easy as possible and really, really cost effective to try and get more founders to file that. And when they file that, we get their new financials and we get to share that with you, our community, about how those companies are doing because it gets filed with the SEC. So we're making a lot of efforts to be able to kind of data share and find more ways to keep founders engaged in doing the things that they're supposed to do so we could keep investors updated on how those companies are performing over time. And there's a lot more there and a lot of other opportunity. Yeah, Peyton, please.
I also wanted to say, Chris, really what we're doing, is as this industry evolves, we really want to have that gold standard, right? So everything is done at a high level, right? And so it keeps the industry at a high level, which will make more successful founders. So really by offering, founders are founders, right? Because they're new at something. So they don't have years and years of experience. So if you can take them from the start and educate them and show them data-based points on what should I raise Reg D? Should I do a Reg CF? Should I do a side-by-side? At what point would I go to Reg A? And be able to answer those questions. I'm a brewery. What's the best type of path for me? I have an amazing community. Will that make me successful? So to be able to have those conversations and offer those tools to people is so empowering. That creates more success in the industry. That creates, more attention in the industry. And it just builds and builds and builds. And having the KingsCrowd data come in to raise papers is amazing what it's doing for our founders. It's really fantastic.
And by productizing it and trying to remove lawyers from the process as much as possible, right? And put more on software and automating as many of the processes and creating a Form C or 1A, so on and so forth. Our goal is always drop the cost of doing these documents in half for founders. Yeah. One of the other main problems we always hear in the industry is costs associated with a raise. So we're really trying to help manage those costs, bring them down, and make this space more equitable and accessible, not only to investors, but to founders as well. So there's a lot of really exciting things going on at Raise Papers that I'm pretty pumped about. We're partnering with a lot of new platforms that we're excited about, whether that's issuance and securitize and going into Reg D and Reg A products. So really, really excited about what we're working on. Peyton, thank you very much. I just want to make sure we have enough time to go through our product and also continue to answer some questions here. This is a great discussion. So I'll answer a couple more quick questions that I see in the chat, and then we will go on over to Brian. And I'm really excited to show you some of the new things we have working on the product front. So this question comes from Patrick, and he's asking, are Republic or comparable companies offering help regarding valuation, raise contracts, et cetera? If yes, how is your service different to it? What we're finding is the answer is no on that front. A lot of the platforms are actually deeply excited that we have created the founder valuation and market comps tool because they really don't have anything to go off of right now to have the discussions with founders. They try and push back on founders. They maybe try and find some offline comps, but they find that those discussions are actually really hard because they don't have more data to go off of. We've actually talked to one platform that actually wants to integrate the KingsCrowd founder valuation tool directly into their platform to be a part of the onboarding process. So it's very, very unique. And we're the only company, right, that's really looking across the entire industry at every offering. So even if within a platform, you could talk to the other deals on your platform, if they're deeply different industries or stages or whatever, it's just not enough aggregate to get to like, hey, what should those bands look like? So I would say it's uniquely differentiated in both the comprehensiveness of all the comps that we can look at and the fact that, again, really the platforms don't have anything like this off the shelf. The other question I see here is, how does KingsCrowd assess the valuation of a company and factor that into the ratings? It's one topic that every investor is going to have a different philosophy on, so I'm curious how Casey's algorithm and analysts think about this. I'll provide my kind of quick answer on this just to keep things moving along, but essentially we've built a comparative rating model where we look at all companies of a similar stage and we compare and contrast them against one another. So it's all the live deals. So today there's 500 seed stage companies. We will look at all of them and their valuations in comparison to one another. So for instance, if you're a seed stage company and you have a $20 million valuation, but the median is 9 million, you're going to get dinged on valuation. Now, at the end of the day, you might then go look at their market section and say, well, they're in a way bigger market than some of these other companies, and I have no issue with that. And that's great. You're using it as a, kind of a guess and check or a red flag checklist, right? It's like, okay, their valuation's high, but I think it's fair for the size of market that they have. But you might go and say, well, their valuation's super high and ooh, the market doesn't support it either. Okay, this is one I should stay away from. So it's a comparative-based model. In the future, as we continue to learn, continue to build the algorithm, continue to test it over time and see the results, there is a world where potentially we could build a predictive model, right, that says, hey, this is what a good company looks like. This is what you're pegging towards. But right now, we think the best model is to go kind of from the bottom up and do a comparative-based model to see how companies compare against one another. And I think in general, we find that works fairly well. Now, one of the other opportunities that exist is to go one step deeper than just looking at similar stage and actually doing an industry level analysis as well, right? When we launched our founder evaluation and market comps tool, I played around with it a lot. Ultimately, I will tell you that when you look within an industry for similar stage companies, there tends to be kind of a grouping of companies that are all in that same range of valuation, then you'll have a handful of outliers. And so I think having this open, accessible, transparent market does drive towards getting to a better price discovery. And I'm hoping we see more of that over time as we have more and more companies raising the space. But that is kind of the strategy that we take. So with that, I'm going to kick it over to Brian. Brian, thanks for joining us today. Excited to chat all things product with you.
Absolutely. Thanks, Chris. And, thank you everyone again for joining us. I'll touch real quickly just to kind of a high level, the product roadmap, and then we are coming up on the end of time here, but wanted to quickly demo one of the things we actually just released this week. And one of the things that we're going to be releasing in the next week or two, which should be pretty exciting, especially as tax season is coming up for all you startup investors out there. So high level product roadmap, right? When we think about KingsCrowd, one of our core parts of our business, right? And one of the biggest things in terms of our moat and our competitive advantage is our data. So we're always looking to say, what can we do to make the data higher quality, more broad, automating parts of the data collection process so that it's more efficient. So these are all things that we're actively investing in. Product roadmap wise, you might not see this necessarily on the front end, on the website, but it's a lot of the stuff we're doing in the back end. And so, for example, one of those things that we're doing is continuing to integrate AI, right, in parts of our workflows, both in how we're rating companies, maybe not rating companies, but today, writing the reports on them. So one of the things we actually did last year, I think it was actually towards June of last year, so we've had this for a while, is we launched some integrations with some different large language models that allowed us to help the investment analysts like Olivia to be able to take all of these hundreds of data points and expose more of it to the investors who are looking at our website. And so the analyst reports that we put out are basically AI enhanced, where it helps to kind of help the analyst come up with a first draft, make sure they didn't miss any, key details or little nuances. And sometimes, honestly, we've even heard it's teaching them things. It's, like, oh, hey, like we didn't even know of this one market over here, but, the AI kind of suggested, we look at this. And so it's actually really enhancing both the quantity of kind of what we can do with a small team, as well as the quality of those reports. So that's an example of, a lot of the different things we have going on the data side. In addition to that, we're looking at the kind of research and reports, right, and what more we can do there. So Olivia talked about in terms of the ratings algorithm updates. Some of the other things we're doing to help investors is we're going to be putting out basically kind of think of it like a red flag or notable items checklist. So companies that maybe have low runway or uncapped safes, things like that, they aren't necessarily reasons that say, for sure, don't invest in this company, but it's things that an investor should probably dig in a little bit deeper about. So we're actually going to be launching that hopefully in the next few weeks. You'll see that on all of the Raise pages, where it will just kind of bring to the top any of those items of particular interest. Lastly, kind of the third bucket of product roadmap items are things around engagement and acquisition. And so we've been doing a lot of focus around the portfolio management tool. Now, this is something today that is free on KingsCrowd, and we do that for a couple different reasons. One is we do want to provide a lot of value to users and investors, right? So maybe investors are pausing because of the economy, their investments, or other reasons. They still need a way to track and manage that portfolio, and we can provide a ton of value to them through the portfolio tool by doing that. What that does for us as a business is, think of it, customer acquisition, right? We have customers coming to us because they know that we can be the one-stop shop to track their portfolio, basically, and see all the updates and company activity. In addition, going back to the data, right, as being one of the core parts of our business, we are getting additional user data being fed in. So what that, could look like in the future is looking at different trends, almost kind of ahead of what we're seeing in the markets, right? But taking a look and being like, oh, it's kind of interesting that a lot of our users tend to be investing in this industry or these companies or these check sizes. There's a lot of really interesting stuff that we can internally kind of take a look at some of that and kind of keep up with the industry. So I'm going to share a super quick feature and a quick tease of something we're going to be launching next week. I will share my screen here. One of the things we launched this week was actually the ability to add portfolio investments for non-KingsCrowd tracked companies. So this could, think of this like an off-platform investment, something that is perhaps a Regulation D, maybe you're investing on AngelList if you're an accredited investor, or just another alternative. So you can see my screen, right? The portfolio here.
Yep.
Excellent. What you have to do, super easy, go into your portfolio, just come basically to add an investment, type in the name. So let's just pretend Stripe. Stripe is still a private company. Obviously, they're not doing a crowdfunding round, but you can invest them. So you do the click to add the amount, and then you can just add a few quick details. What was the security type? What was the platform that it was on? If you wanted to add other things, such as the deal terms, you can do it and hit add investment. As easy as that, you can now basically consolidate all of your alternative investments in one place, and it will show in your KingsCrowd portfolio. Now, where this starts to become really interesting as well is you can see the allocations when you go to your analytics page. And, speaking personally, right, where I have tons and tons of investments, it's a bit of a pain if I have some in a spreadsheet over here, some on AngelList over here, the ones on, different crowdfunding sites. So this is really customer-driven feedback where our customers told us, hey, I want to be able to track all my investments in one place, including things that KingsCrowd doesn't have. And so we now enable that. So that's live today. You can go to the website. This is just a dev environment, so don't go to kc.local, go to kingscrowd.com. But the other thing I'll just tease that we're hoping to release in the next week or two is a tax center. Now, this is not going to file your taxes. Disclaimers, obviously, this is not tax or financial or professional advice. But what it's going to do is be able to help you organize your portfolio for any potential exits or failures that maybe you didn't know about. So this is another thing we hear all the time from our investors and our users. It's, hey, I haven't heard an update from this company. Do you know the status on it? Which of my companies over the past year has failed or potentially exited? So what this does is, as long as your portfolio is up to date, you can come into the tax center when we launch this, and it will show you all of the companies that either you have recorded an exit or a failure for, or that KingsCrowd has data on. And I think we're tracking over 250 exits and failures in the online investment crowdfunding markets today. What you can then do is see, quick summaries in terms of exits and failures. You could filter it by year. So say we go back to 2022. This is just a sample case here, but you can see short-term gains of $100 minus 100, long-term gains of 3,000 based on an IPO and a shutdown business. So this is just something that really quickly, with a few clicks of a buttons, at least be able to help you kind of navigate taxes, and then you can use this for your own tax process or working with your own CPA or accountant. So again, this is not live today, but just giving you a really quick sneak peek at this. And we have a lot of other really interesting features around the portfolio tool, around the research that we're going to be launching. So I'll turn things back over to Chris there, but also happy to answer any questions.
Amazing. Thank you, Brian. And if you guys have, product updates you'd like to see, things you're thinking about for your portfolio, we have folks always write in, and that's actually informed a lot of what you're seeing today, right? The free form, being able to add offline investments has been something we've heard a million times over. So you really do inform how we progress and the product developments that we make. So please do send us your thoughts and your feedback. We're always open and more than happy to listen. So I know we're running up on time here. First, just wanted to say, if you're interested in investing in KingsCrowd, with these raises, right, when you're raising money online, if I've learned anything over the first 6 years of doing this, it is all about momentum and hitting your milestones, your milestones, your milestones. We've raised $126,000 over the first week and a half on WeFunder. In order to keep that momentum going, 150 is kind of our next target that we need to hit. So if you are interested in investing, the round runs until April 29th, but everything we can do, the sooner, the better, to A, build that momentum, and B, show that we're continuing to kind of get investors into the deal and hit those milestones, which allows us to then get into different newsletters, so on and so forth, that help drive investment. So please do make an investment. If you're sold and you're like, I want to invest, I would love if you invested today or in the coming days. That would be deeply, deeply helpful and valuable and appreciated by us. And I've dropped the link, again, wefunder.com/KingsCrowd. More than happy to go a few minutes over for those who could stick around. We could go to about 1:05. So a couple of questions that I see here just real quickly. Are you looking to replace Carta or just provide a place to record private investments? Great question, Elizabeth. So at the end of the day, we're not trying to replace Carta. We don't want to be a cap table manager. We're really here to be the portfolio management tool for investors to manage all of your unique investments across all of these platforms, and now your offline deal flow as well. But we are not a cap table manager. We are very much investment focused, helping investors manage all of your unique investments. I know one of the other questions that was asked was, will we create an automatic way to be able to port in your investments from the different platforms? Brian, can you speak to that a little bit?
Yeah, this has been something we would love to do this, right? And I know for a lot of our users, just to be able to have it automatically in sync, for a now defunct company, but something like mint.com, right? Where you just automatically connect with all the different crowdfunding accounts and it syncs it. This is something we've had preliminary discussions with the funding portals on. Now, a lot of these funding portals are startups themselves and have their own priorities, right? So it just hasn't bubbled up to that list yet, to that priority list where they've been able to implement it, but it's definitely something we're still continuing to investigate as something in the future we can offer.
Awesome. Another question about the portfolio is, will you allow more than one portfolio per user someday?
Yeah, that's an interesting case. So we actually, when we first launched, we used to allow multiple portfolios. We then introduced the ability to add tags because we found most people were creating portfolios to try and group them by year or by platform. And a lot of those things you can already filter by in the current having a single portfolio. Now, that being said, I think the short answer is yes, eventually. What we're going to be doing is for like KingsCrowd Capital Fund investors, when you go to your portfolio page on KingsCrowd for those users, you actually see two portfolios. There's your own portfolio, and then there's the KingsCrowd Capital portfolio, which is read only. So eventually we could see almost a collection of portfolios where, again, when we expand into other alternatives, perhaps you have your collectibles portfolio, your real estate, right? Things that might have different parameters that aren't all startups necessarily in one place. But if you ever have feedback or particular use cases, feel free to reach out. You can send an email to product@kingscrowd.com, and I'm always happy to chat about that.
Awesome. Thanks, Brian. Another question that came through: if a company uses raise papers, does this create any expectation for how you will rate the company? Great question. Absolutely not. One has nothing to do with the other and never will. Otherwise, we'd be a worthless company, right? If someone gets some incentive to be rated well, then our rating means absolutely nothing. So they have nothing to do with one another. No one will ever get any preferential treatment for having worked with raise papers. And the truth is, one of the ways we just manage that in and of itself is the analyst team is wholly and completely separate from anyone involved in creating documentation. And frankly, they don't even know who the customers are from raise papers. But regardless, internal policy is that there is no justification ever for any company to get any sort of preferential treatment whatsoever from the KingsCrowd team in their rating. It is totally quant driven and completely involved in what the quant says and nothing more. The only time we ever correct anything is if we quite literally hear from a founder that there is an incorrect data point or something that's really off. And we do get feedback both from customers and founders. And if it is factually incorrect, we will fix things. Other than factual incorrectness, we will never make any changes to the ratings. Let's see if there is any other questions here. Just if we have one more minute. Okay. At some point, will KingsCrowd Capital be available to non-accredited investors? What's needed to make that happen? Aaron, great question. My answer is I hope so. It is incredibly complicated, incredibly difficult to build a venture fund today for non-accredited investors, which I think is an absolute travesty. It's how the regulations are written. It's a real problem and something that I want to see change. So I think one of the ways we can help with that is to have KingsCrowd's Capital be successful and then try and lobby in DC and get to know the right people to try and push for legislation that changes and allows for individuals to invest in venture funds. I do think in the next 5 or 10 years, that'll become a reality. The only one who's pulled off creating any sort of venture fund for non-accredited investors is a group called Sweater Ventures, which I urge you to go check out. I think they're phenomenal. And they have gone through spending millions of dollars to create this very complex structure under Regulation A+ that allows to create these very specific types of funds that act like a venture fund in many ways, but it's really, really complicated and like a whole business in and of itself right now. So again, we're not going to go down that path right now. We may partner with this sweater type company in the future, and hopefully the regulations just change in our favor to allow that. But right now, as kind of the structures stand, it's just far too complicated to do so.
Chris, if I can just add to that real quick.
Yep.
Our analyst team does publish top deals with a why we invested section on the website. So if you want to invest alongside the fund, that is possible if you're not accredited.
That's a great question. Yeah, we actually simplified all of our kind of analyst report stuff. If it is a top deal, it means we were putting money behind it out of the KingsCrowd Capital Fund. So if you follow every top deal, you are quite literally following the exact same strategy the fund is undertaking. So there is a way to recreate it. It would just require your own investment and doing it on your own. But you can follow our strategy. Last question I'll hit on here really quickly, and then we'll wrap up here. Do you have a Dow Jones type indices on startups, say on startups under 10 million, over 100 million, et cetera? That's a great question, Pramod. We don't have exactly this. We've looked at ways of trying to create indices. At the end of the day, if you'd like, you could go into our advanced search and look at the entire history of all the companies that fit certain criteria like valuation, revenue multiple, so on and so forth. So there's a way of kind of looking at that universe and having a sense of what that looks like. Creating the indices right now, there's been some complexities in figuring out exactly how to do that in a thoughtful way and be able to track that over time, right? And when valuations change and all of that. So we don't have a perfect answer for that just yet. But at the end of the day, we we're doing everything that we kind of can to make all of that information as accessible as possible. So everyone, thank you so very much for joining us today. It's been an absolute pleasure having you all. Really appreciate Brian, Peyton, Mike, Olivia. Thank you so much for your time and insights. We're really excited to have you join us on our journey, and really appreciate your time and questions today. Have a wonderful day, everyone. And if you have any questions, please reach out.